What is causing the sell-off in the crypto market? Is it the German government, or more particularly the BKA, the Federal Criminal Department, selling their Bitcoin? Or could it be the redistribution of 141,686 Bitcoin, worth approximately $8.3 billion, from Mt. Gox? We've seen nearly $400 million in 24-hour liquidations, 372.54, with the vast majority being long liquidations. Now, what does this really mean, and what's going on inside the crypto market? It's time to find out, so let's run the numbers. Happy 4th of July to our American CTKS family. Yesterday, we saw 321.47 million in liquidations across around about 114,000 positions. I said on Twitter/X, it's still too low. We need more. Now, why would I say that? I want to go into that today. Inside financial markets, there's two ways to make money. You can go long at spot, so you buy first and you expect a higher price, and then you sell there. The difference between your entry and your exit price is your profitability. But shorts also can make money. You can sell and then you can buy back. That's called shorting the market. What you can see here on this liquidation heat map, when we get liquidation levels above the current price, they're shorts. And as price comes through this, they have to cover those shorts by buying, not selling, by buying. Too many longs in the market makes the price come down because they're high liquidation levels, and too many shorts in the market makes the price go up. We've had an absolute absence of shorts inside the crypto market of late. Everybody is far too optimistic. These liquidation heat maps, and here we're seeing on the 12-hour, the other one was the 24-hour. We've got still a lot of people buying the dip, and these people may find that the dip keeps on dipping. When we zoom out to the 3-day approach, we can see there are a lot of shorts above the current price. In order to get an exponential blow-off increase in price, you need a lot of these shorts inside the market. And unfortunately, shorts have been nowhere to be found. That's why the price is coming down. It's all about liquidity. Heading towards the 1-week liquidation map, you can see that the shorts just are not in the market. There were too many longs. So what does liquidity do? It just gets magnetized to these levels, taking out one side of the trade and then taking out the other side of the trade. You can see there's still not enough shorts to propel price up further. This is exactly why I said that we need to see more and more liquidations. You shouldn't be afraid of liquidations unless, of course, you're getting liquidated. When we look at the 1-month liquidation heat map, you can see just there are not enough shorts inside the market. Now, what does this mean? Well, it means that we're going to find that the dip could probably and most likely keep on dipping. But this is not a problem because we're calling all the shorts into the market. When you see more puts entering the market, what that basically means is that people are shorting the market. When you see calls entering the market, that's like they're longing the market. They long for prices to go up, and shorts put down price. We can see the puts are actually getting into the market for once. The calls have been outweighing the puts by many a factor, and this is an unhealthy market. When one side dominates, the other side is set to take over. Fortunately, the market is starting to come back into balance, but you can see it's still out of balance. During times like this, people tend to get pretty angry. They think that the market can only go up. And of course, that's not true. The market is always moving in a wave-based function. It's going up and down all the time. Unfortunately, people don't understand the dynamics of financial markets. Your knowledge should always be greater than your emotion. When social media starts to put out memes about things getting destroyed, okay, we're calling in the shorts. Professional traders and investors have neutral stances. In fact, they can be quite excited when the price comes down because they're getting a bargain. However, this is only 5% of investors and traders. Substantial amounts of knowledge are required to trade and invest professionally. Emotional control is absolutely critical. Also, inversion of thinking is very important. When the prices are coming down, that's the time to get excited. When they're going parabolically up, that's the time to be cautious. It's incredibly difficult for people to think this way. That's why you need a lot of time on your side. You should always start small and scale, and don't go under leverage until you're an expert at spot. Our focus is to help you to be more of a financial and emotional blessing to yourself and those you love through becoming an institution of one. If you're liking the content so far, please smash that like button and don't forget to subscribe. We cover things from an institutional mindset, not a retail mindset. Many people have heard of Wyckoff distributions and accumulations, but Richard Wyckoff always said that you must look at the market and judge it by its own movement, and remain impartial as you're doing so. Unfortunately, people want certainty, and you don't get certainty inside financial markets. You have a stacking of probabilities. The optimal way to stack probabilities is to look at the Tier 1, Tier 2, and Tier 3 charts, especially the structural levels, because price is always moving between them. So far this month, with Level 1 and Level 2 standard certification, these charts have been marked up. This is not an automated process. The charts are released by a schedule. If particular charts are exceeding their boundaries, they get preference to be marked up before other charts. When prices come down like this, if you've got a professional mindset, you're getting really excited by this. That means the longs are resetting, the shorts are entering the market, and upward price momentum is on its way. It's absolutely opposite to what retail think. Retail would have never thought that we could reach 57,000, and about a week ago I put this 57,000 level in. On your pathway to be a professional or to enhance your professional skills, always know that you must have 3 simultaneous decision-making processes playing at the same time. A down strategy, even if you're going long at spot, a neutral strategy, and an up strategy. When we typically place a buy going long at spot into the market, people assume it can only go up. This is not the case. One of the cornerstones of the CTKS method is the price is always moving in a wave. It's always going up and down in an uptrend. And we've just witnessed a retracement, and it's not that bad. In terms of bull markets, you can get 20, 30, 40, even 50% retracements. What we're experiencing now is just mild. With the right mindset, you won't suffer psychological trauma and constant anxiety. Because you know price is always moving in a wave, and as Bitcoin moves, so too do the alts. The problem is that people don't have a rule set, and unfortunately they also don't have knowledge. People new to trading and investing inhabit Zone 1 and Zone 2. These are terrible zones to live in, a panic zone and a blame zone. All of that anger is Zone 2. Things getting destroyed and people just panicking and suffering emotional and psychological torment. Financial markets are all about learning. We must have patience. We must have rules. We must understand what we're doing. And in order to make money, making money is one thing, and many people have made a lot of money, but they don't keep it. You must make it and keep it, and seek to avoid losing it as well. This means that people, in order to become professional, must move away from certainty into stacking probability and collecting rules. This is not really easy for people to do because the education system is set up to create certainty. People want the certainty of a regular paycheck, and therefore they trade their freedom for certainty, and this happens all of the time. Instead, trading and investing is more like a business where the day-to-day returns are not guaranteed, but over the long run, if you follow the rules, you will make money, and if you have the right attitude, you will keep it. Please also don't get sucked into narratives. What happens in the news is the reporting of what did happen, not what will happen. They're two incredibly different things. Journalists will simply look for something, anything that can give them insight into what did happen. They don't report what could happen. Only structure can tell you that. One of the most important skills that you'll ever learn is how to interpret structural resistance and structural support levels, and if a particular chart is failing or passing. For example, if we pop on the indicator from the service, we get these lines. These lines correspond to these numbers on Bitcoin. What we saw just at the start of the month was that we failed to get over the 63,985 mark, convert this structural resistance into structural support. We didn't flip that level. If we don't flip the level, we're going back to the level below. We can see that we failed to flip this level. We also failed to flip it again, that 63,261 mark. So we had a fail, a fail, a fail, and then again we failed. When you have a failure, that means more negative price momentum is in store. We got supported by this 61,830 level, but we failed dramatically to get back to the 63,261. Then we failed again. We cut through the 61,830 mark. That was pretty much an epic failure. Just pushing the chart down a little bit. So we had that epic failure at 61,830. Then we failed at the 61,402 level as well. These repeated failures are looking for more and more underpinning structural support, and structural support acts as a safety net. It typically rebounds price unless the sellers are just far too strong. That's why we must keep our eyes on the passes and the fails. You can see that even though we came down to a structural support level at 60,665, we failed to flip this level of structural resistance into structural support, and then we came back to that level that we had previously been at, and we failed. This meant that we were moving to that lower structural level of 59,892. We tried to get back up to the 6665, but we failed, which meant that we were moving back down to the 59,892. We tried again, had a negative air gap, which is a significant fail, and we had a cut through, which is also a fail. Reading passes and fails is particularly important. You can see that epic failure at the 59,892 mark. We needed to come down through successive layers of structural support in order to rebound price. But when we came up to the $59,000 mark, we failed repeatedly. If we're failing, it means we're coming down to stronger clustered levels of structured support or structural support. Zooming out a little bit more, you can see that there are multiple structural support and resistance lines inside a chart at any time. You have lighter ones, you have heavier ones. And when you get a stronger clustering of heavier lines, especially when they're supported by lighter lines, you can see structural reversion occurring. What we're looking at now, currently Bitcoin is 58,145, but I wanted to show you how you can look at passes and fails from a structural perspective. At least we got one pass at the 58,299 mark, but you can see that the 58,178 mark is quite well defended by the shorts. And of course, if we get above that level, a lot of shorts are going to get liquidated. Don't forget, what's actually happening right now is that the market is liquidating the longs to call in the shorts. Therefore, personally, I'm leaning in quite heavily, especially on Bitcoin. And why is that on Bitcoin and not on other alts? Of course, I have positions on other alts as well, but Bitcoin is my focus. The primary reason for the allocation into Bitcoin tends to go down less than the alts, and that is a good thing in a negative price market. But also keep your eye on Solana and Ethereum. I think that could do really, really well as things start to bottom out. And of course, we just need to draw more shorts into the market at the current time. This is literally all going to plan. Personally, I'm not concerned in the absolute slightest. The most important thing you can do right now is to know where the structural levels are, how thick they are, how clustered they are, and how price is interreacting with structure. It literally will tell you everything. You can learn how to draw this structure up yourself through 2 levels of standard certification. Or you can have all the hard work done for you by just adding in the indicator. But no matter how you do it, it's very important to understand that price simply relates and interacts with structure. If we get a structural failure, it's moving down to deeper structural support levels, and that's all there is to it. If we get a bounce from structural support, that means it's moving into structural resistance levels. If we get across those structural resistance and flip them into structural support, we expect higher prices. But all that's happening right now is the shorts are getting attracted into the market. It's a surefire thing. That price is just going to go down and down and down, or so crypto Twitter and all the social media sites would have you believe. This is calling in the shorts. The shorts, unfortunately, will get smacked when it becomes a guaranteed thing. And we will see God candles in the crypto market. But because we don't really have the propensity of shorts in the market that we need to get into the market, we're likely to get a bit of negative price momentum. But always do your three-dimensional strategy. Just see how price is interacting with the actual structural levels. If it's falling below an underside retesting, it's coming down to the next structural level. Or if it just cuts, that's a very good sign that's going to hit a structural level below. Just take a bounce and a breather and probably continue onwards. Just keep your eyes on structure. It is everything right now. Getting your learning under control is so incredibly important. Even more so is having 3 concurrent strategies for down, neutral, and up. Then making sure that you have a very positive attitude. It's only in self-mastery that we can create wealth. A negative attitude just won't cut it. It creates poverty. The foundation of success is dealing positively with losses, and this not just about financial markets, but about everything. Don't let your grief overtake you, ever. This may sound really counterintuitive, but when things move against you, do not let grief overtake you. Grief, just like blame, is an incredibly destructive thing to feel. Just focus on things will get better. Just know that life, just like the financial markets, is always moving in a wave. And if you're going through a life pullback at the moment, our love and healing thoughts are with you. The sun will come out again. Be strong, my friend. Knowing where the structural levels are is one thing, but being able to act on them is a completely different thing. But it's absolutely the first vital step that you need to know. Know where the Tier 1, Tier 2, and Tier 3 structural levels are. If you're inside the service at ctksmethod.org, the new indicators show themselves by their expiry date, the 3rd of August 2024. So that's something that you want to keep an eye on, 3rd of August 24, or something in August, depending on what the particular chart markup represents. But the July starting point is what you want to look for. If it's June, it's for the last month. The indicators are being released as quickly as possible. Your daily positive affirmations for abundance, financial success, and happiness. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. And always know, I know opportunities and life reset daily. All that's happening right now is that shorts are being pulled into the market to be liquidated going forwards. The longs get liquidated as the price goes up, and the shorts come into the market as the price comes down. Just remember, this dance is always occurring, and it occurs around structural levels. We have a magnificent global family. There were so many fantastic comments in the last couple of videos. Today, let's talk about learning. Learning is earning, without a question. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.